Hello everyone, this is Greg here. Now today I want to show you all something very interesting happening in Apple, the ticker AAPL, specifically in the 7DTE option chain. And we're mainly going to talk about the spread positions, iron condors, and singles. Let's begin. First of all, looking at the chart here, there's a huge gap happening today. Implied volatility has risen quite a bit, and if we look at the flows here, specifically close to the strike price, we see big changes in flow. So what does that tell us? So it tells us that not only is there big movements currently happening in the market, and that there will likely be continuous bigger movements happening in the weeks to come. Specifically, let's look at the next week. So let's go back to the our option chain intelligence and see the detailed, interesting position that our system has picked out. Let's go over here. Now, based on the flow and the implied volatility, plus these individual positions that our system picked out, it tells us that there's likely big movements in the weeks to come, and probably next week. Let's look at the detailed positions here. Okay, so the first position here we have this is definitely bullish. Further out of the money, bullish. This one's also bullish. And as we get closer to the spot price, we'll see bigger positions, especially on this type of shorter DTE option chain. Oh, okay. So this one is actually bearish, or rather, not really a bearish, but this particular position here is structured in a way where it's betting that the price will not go back above 335. But let's move on to the next position here. Okay, so this is definitely a bigger bullish position with 1,246 contracts. Now, again, unfortunately, right now I cannot show the actual premium for these positions, but maybe in the later videos I can. I need to get permission for that. That one's also bullish. Yep, so this is a bearish position. Yep, this is also a huge position betting that the price will go below 300. I think we are. Yep, this one is bullish. Bullish as well. And this is also a big position. This is actually bullish. Selling 300 put and buying 290. Pretty much is betting that in the next week that the price will go above 300. Let's look at the next one. This one is bearish. Yeah, and as you can see, these are huge positions, both in the, well, actually, let's finish this part first. This one is bullish. Placing, buying 3 of 8, call right at the money, pretty much. This one's also bullish. Yep, that's also bullish. Yeah, this one as well. Alright. I think this is part of a earlier position that we reviewed. This one's also bullish. Yeah, this one as well. Okay, let's look at the iron condors. As usual, you will always see iron condors, especially on higher stocks that have higher implied volatility, because Higher implied volatility means higher premium, and a lot of institutions will use iron condors as a strategy to collect premium, sometimes on a monthly basis, sometimes depending on implied volatilities for individual stocks, depending on the strategy and depending on their portfolio setup. But yeah, so far based on the vertical positions, it seems like some of these big players are bullish. Perhaps they're thinking that that's quite of a big drop, a big gap, that perhaps it's a little oversold right now, and they're betting that in a week that the stock prices is going to go back up and fill up the gap. That does happen quite often, but of course there's risk in doing that. But and again, these are not all of the positions available in the option chain here. These are mainly the bigger, more unique positions that our system have picked out, our algorithm has picked out. So just keep that in mind. But yeah, quite bullish and quite big positions. Iron condors as well. Let's just finish clicking through these positions. Yeah, and if you are thinking about using an iron condor to collect premium during volatile times, some of these positions might be a good reference on how to place the different legs. But always be careful. When implied volatility is higher, especially during or before or after earnings, things can get choppy. So just watch your position. Yeah, okay, so let's go into the singles. Now, oftentimes the single positions can be more interesting because they're more directional. Their intent can be more obvious. Sometimes these vertical positions, although they might seem bullish or bearish, they could be part of a bigger strategy, or might be just a smaller portion of their portfolio. But the singles, they typically tell a more clearer story, clearer intent. Let's look at some of these positions. So that's bullish. That's also bullish. Sometimes these single positions or verticals, despite looking like bullish, like they're bullish, but sometimes they might not be. Like for example, on a more volatile stock, when there's a bigger short position, some of these calls might be hedges for their short positions. So just keep that in mind. That's a huge position, bullish position. Yeah, actually these positions up here, they're quite aggressive, quite bullish. And especially when we're in the 7 DTE option chain, these are quite far out of the money. So I don't know, sometimes these might be from retail traders or YOLO traders from Wall Street Bet. It'll be interesting to see where the stock will end up in a week, but yeah, these are pretty big position. Not that huge comparing to some of the other positions we have seen, but yeah, quite a big position and quite far out of the money. So yeah, I don't know, they just might be retail positions. Quite risky because despite the big gap for the stock to fill, potentially fill, we only have a week, so there's a less chance that it's a risky trade. Of course, these far out of the money option contracts, they are cheaper. So if the stock does rise a lot, of course you will be making insane gains. And that's what some YOLO traders are betting on, like 2x, 3x, 5x, 10x their portfolio. It's certainly fun, but risky. So keep that in mind if you're planning on placing this type of trade, especially on a shorter time frame, shorter DTE option. All right, that's bullish as well. So yeah, a lot of positions are, at least the bigger positions that our system picked out, are quite bullish today. Yeah, that's a huge position. These are probably from institutions. Yeah, but keep in mind that even though these positions might be huge positions, but they're probably just a very small portion of their portfolio. Let's look at this one. Okay, so this is bearish, or this could be a hedge. Actually, yeah, likely a hedge. This could be a leftover position from weeks ago. Again, the put side, especially on this kind of bigger mega cap stocks, a lot of these put buyers are hedging for a much bigger long position on their portfolio, especially for Apple. A lot of institution hedge funds will be holding positions, Apple positions, and especially during earnings time, they will be buying put positions to hedge their position. And this one is most likely a hedge position from weeks, maybe even months back. Later I will try to get permission to show you the premium and also the date of entry for some of these positions. We do have that option, but I'm just not able to show you that right now. But it'll be interesting to see. Yeah, most likely hedge positions from weeks or months prior, and in cases where there's a huge drop, like in this situation, or in the next week, if it continues to drop, these hedge positions will provide profit to cover some of the losses in their long position. Yeah. This one is bullish. Yeah, this one is also might be a bearish position, but could be just a hedge. And that's a huge position. This one actually might be bearish. Yeah, keep in mind that despite a lot of the positions we've seen so far, they might be bullish, but that's just a portion of the market. Some of the bigger, that's a huge position. But yeah, that's just what some of the positions our system picked out. It could very well be bearish, despite the big gap that we're seeing. There's a high chance that, yes, indeed, this Apple will rise in the next week or the weeks to come, but it's also likely in the other direction. It might go down further. We'll never know. So just be careful if you're placing, if you're gonna play the option market. Just always be careful. Oh wow. Okay, this is that's a very bullish position right here. And yeah, these are single, somebody is selling, actually two different players are selling puts at this specific strike, big position. Essentially what it's betting, they're betting on the price in the next week will not drop below 295. Typically institutions will use this type of positions to either bet that collect premium and bet the market won't go below this position, or this might be their desired entry point. Yeah, that's interesting. So for retail traders, this would be called a cash secured put. Essentially, you're selling a naked put with cash as collateral. And yeah, you're just betting that the price will not go below 295. That's interesting. And even if it does go below 295, typically you set up this kind of position, prepare to enter, and just buy up the stocks when if it does actually go below that point, and that would be your desired entry point. And of course, that's a huge position, so likely institutional. But yeah, that's interesting. So this could be let me see here. Yeah, this could be this could be a good support right here. Very interesting. Okay, let's move on. Yep, that's bullish. Likely a hedge. Wait, actually, this might be a YOLO trade. This might be from a retail trader. Not just because of the size, but also because of its position, and we can never know for sure, but this is likely retail, so that's interesting. So this, if this is a retail trader, this would be a a YOLO trade going against, well, not really against, but it's just betting that the stock will continue to drop. We'll see. We'll see within a week. But that's quite aggressive, quite far out of the money. Yeah, likely a directional bet, and likely from a retail trader. Yeah, we'll keep an eye on that, and we might be doing more videos, like follow-up videos, and show how the earlier positions have changed in future videos. And yeah, we might revisit this. Okay, let's see. Yeah, this one as well, similar. And again, okay, they could be hedge positions, could be bearish, but I mean, we are looking at a 7 DTE option chain, so this is quite far out of the money. If it's a directional bet, it's very unlikely that this would succeed, but we never know. So yeah, certainly interesting. Let's see what happens in a week. But thank you, everyone. Thank you for watching. I think that will be it for today's video. I hope it is helpful. I'll be doing more of this type of video, just showing you what the market sentiment is with specific tickers, and more importantly, I'll be showing you the potential bigger positions that are out there, just for your reference, just so you can see what some of the bigger institutions or retail traders are doing that might help you structure your own trade. But yeah, thank you. Let me know what you think in the comment section. If you want to see, if there's something you want to see more in the future videos, just let me know. Thank you.